Good morning, trader. This is the second Champions live stream summary presented with the help of Claude AI model, Kimi model, and some of the technical rights have been presented independently. Sorry for the delay in the live stream. It's not sorry because there are some illegal tussle between the chart champions and our YouTube channel, as there are many formal legal complaints have been filed by the chart champions. So they, you can expect these kinds of delay in the present live stream. So let's begin. So first, the champions live stream has been presented on 22nd June 2026. So this is basically the summary presented with the help of Claude and Kimi AI model, and also I have given my own independent technical write-ups in this live stream. If you want to get the full analysis of this live stream and the AI summary, please visit our website and also join our Discord. The Discord and Telegram invite link has been given on website. You can go through our website and then join the Discord. In this Champions live stream, the Daniel has presented first. He covered the weekend price action by covering two simple diagrams. The first diagram is, as you can see on the left side, there is follow through. There is a resistance at the endpoint, and the price basically goes through this endpoint. And basically, if the price goes through the resistance and came back below the resistance and retest the resistance and came back again, that's higher high and higher low, and then again higher low, and then that's the bearish retest, and then it came down. And the second diagram has been presented if there is a resistance and price gets back through that resistance and retest the resistance and not came back below the resistance, and then it reclaims the resistance and it goes through the goes to towards the up direction. So basically that's you can see in the right side. So basically there are two diagram on the left side and the right side. This is the market structure. You can see same kind of analysis in harmonic patterns and also in Elliott wave structure. These type of market structure things has been used by the chart champions, and Daniel and I think Sabrin also use this market structure. So basically this market structure is what they have presented, but I don't rely on this market structure. And as you can see, I have given the same context to the Claude AI model, and Claude AI model basically says the simple thing about that, the whether if there is a breakthrough in the price and it goes towards upward, whether there is any kind of volume has been followed through or not, and whether if there is a retrace and came back to the downside, and in that case whether there is a decrease in the volume or not. This volume is a simple thing that has been used like 2 to 3 years back, like in 20 COVID times or like around that year. So these volumes are simple analysis used many years back ago, and currently this is not the same thing as you aware that the whole BTC thing has been manipulated and fucked by Trump and US institutions. So you cannot rely on this simple volume thing also. And now yeah, so now I'm going to give up some of the important things of my own and technical write-ups, and I will tell you why I do not rely on the volume, idiot wave, and harmonic and market structure thing. As these are very old concepts and does not the U.S. institutions and those Trump fuckery does not follow in the present time. So the first thing is you can see in the chart. This is my own chart of trading view. So there was currently no wick to the downside in the weekly candle. So on Monday, basically the BTC start rising, and everyone start getting FOMO long. And but they missed the concept. There was no wick at the bottom of the weekly candle. The same no wickless application should be applied in the monthly candle, 3 monthly candle, 6 monthly candle, and 12 monthly candle. And you can also apply in the weekly candle and daily candle. If there is any kind of missing wick to the downside or the bottom, you can expect a price, revisit that and make a proper good wick. These non candles also, if you go to the TPO chart, is presented with the help of poor high and poor low. This is the same thing, and there is nothing too complex about it. It's simple, no big thing. The second thing has been presented with our own website is the weekly candle range analysis. So basically, it's you have many times you have seen that Igor has been talking about the one-time framing and the and savoring does apply this the candle close. Yes, so basically this is the candle close structure which is more reliable than Elliott wave market structure, like higher high, higher low, and other things like harmonic and many other things you already know in Champions Live Chart Champions. If you are a part of a Chart Champion member, you will know what they talked about. So this is the candle close structure of a weekly time frame. So you can see there is on the left side there is written on the left side to the downside you can see weekly range low and at around $65,746, and on the left side in the middle you can see weekly range high one, so that is 72,000. Yeah, that is around $72,500. And if you see there is a valid weekly body close return, so this basically represents that weekly candle has closed above weekly range high one. So on the left you can clearly see the body of the weekly candle has been closed in green. So that is the point when you take a long or not you cannot take a long at weekly range low. So similarly, another thing, if you go to the upward in the middle and on the left side there is weekly range high 2. Now it crashed and you can see around $72,460. The weekly candle start making red, but it not in the weekly chart. You can see there is a close below the weekly range high one. Yeah, so if you want to find out, you need to go to the daily candle. And you will see that below the weekly range high one, the daily candle closed below that level. Now it crashed through it. Now we can see the weekly body close, that is weekly range low, that is $65,746. Only if any weekly candle close above this $65,746, and there should be a good amount of weekly green candle body close above this level, that you can only know by the end of Sunday and on the Asia Open of Monday or CME Open on Monday. So if there is a weekly body close, not the week body closes above this $65,746, then only you can consider a long trade above this level. So this is the weekly range analysis. You can apply the same thing in daily market structure and 12-hour market structure, but most significant one is the weekly and 12-hour. And monthly is not followed through. You have to apply and test on at your own level. But there are some data and relevant, and with some kind of experience, you will be able to know that weekly market structure followed more than the daily market structure. And this market structure is based on body close and not an higher high, higher low, in Elliott wave and not an harmonic. So you have, this is more reliable in my opinion. I am not against any kind of ChartChamps opinion, whether they are using Elliott wave or anything. So this is the technical write-up of my own, and you have to, and I think if you rely on this, you will get more good results. Apart from the market structure, Daniel has talked about various naked point of control labels in his Champions live stream. And if you want to pause the video, and you can mark these daily naked point of control and weekly naked point of control. I'm not gonna pause here. So these naked point of control, you can also go through the atas.net, and the software is free for the crypto, and the template for marking the naked point of control is easily available on the internet. So you can mark it on your own independent level. So you don't need to buy any kind of subscription mark these kind of labels. But if you want to buy the subscription, you can buy from us also. And and the same kind of naked point of control you can mark using the trading view. If you this is subscription available in the paid plan, that is the periodic volume profile, and you need to add 3 periodic volume profile: weekly, daily, and monthly. And if you will get the various naked point of control. So airtest.net is free and TradingView is paid, and airtest.net is better than TradingView because their tick size is more accurate than the TradingView. I'm not gonna post these kinds the showing the Daniel and chart champions picture, because as you know there has been a copyright issue between our channel and the chart champions. And if you guys know, there is a simple law about copyright, that is, if there is a book written by any author, now if you copy the whole book, and not basically copying, but if you are adding your own analysis and notes on each chapter or each paragraph, that is not comes under copyright. And if you translate in some other foreign language of that book, that also not comes under copyright. So this is the basic simple copyright law. If you ask AI or Google it, if you will get to know about the copyright law. So you cannot file a copyright claim against our video unless that has been copied thoroughly from your live stream. This is the basic simple law if you should aware before filing any kind of legal notice to our website. Now then, and now Daniel has presented Elliott wave analysis in as his third part of his analysis in Champions live stream. As you can see in the first chart, basically the 1, 2, 3, 4, 5 wave has been marked as towards the downside from $127,000 towards the $57,000. And in the second chart, as you can see, ABC followed by the WXY has been marked by Daniel in his Champions live stream. So basically in the previous Champions live stream, if you have watched, this has been presented throughout the video and focused on inside the WXY. WXY should be followed after the ABC, and ABC has been marked from around 57,000 towards the $81,000. And if we go through the another, now the Daniel has disregarded WXY and says there is to follow through in his Elliott wave analysis, that is 1, 2, 3, 4, 5 from W. Yes, originated from W, and now there has been to follow through, that is 1, 2, 3, 4, 5, and another follow through. If you and this now if we go through the Claude AI analysis, you can see that the whole summary has been presented with the help of Claude AI model. And what Daniel has been talked about, the 5 wave impulse from top $127,000 towards the $57,000, that has been presented with the help of Claude AI model as summary. You can also watch the whole Champions live stream. There is no problem. So the only problem is it's too long and too big and too complex, and you are not able to digest everything in your mind. So it's better to make points of it and write it somewhere. Now 1, 2, 3, 4, 5, as Daniel is talking about, and this 1, 2, 3, 4, 5 is pointing towards around 39,081, that is Fibonacci 1-to-1 extension. And this has been presented with the Claude AI model. The summary and the diagram has also been presented, and now they can go through the Claude AI model analysis of the Champions live stream Elliott wave analysis part 1. you can see there is wave. I'm no expert in the Elliott wave count, so if we go through the Claude AI model analysis of the Elliott wave count presented by Daniel in his Champions live stream, there has been several point has been pointed out by the Claude AI model. That is, first thing is ABC versus WXY ambiguity and wave overlap. I don't understand what she's talking about. So basically, the one thing that Claude AI model talked about is that ABC that has been pointed by the Daniel can also be considered as WXY. So ABC equals to WXY, and but Daniel focuses on ABC count. The second point that Daniel talked about is one-to-one Fibonacci target presented in the as Claude AI model. Third point, that is one-to-one target, one-to-one Fibonacci target towards the $39,000. But 1.272 Fibonacci or 1.618 Fibonacci are also equally valid, and it doesn't matter if you are going to one to one Fibonacci. So in Elliott wave count, as per Claude AI model, Claude AI says that 1.272 Fibonacci or 1.618 Fibonacci are considered equally valid. So that doesn't count towards $39,000 as considered by Daniel. The third point, as focused by Claude AI model, is that the $57,000 zone is a macro demand zone, and buyers likely to defend this zone, as against the Daniel analysis, which Daniel says that BTC is going to $39,000 as part one of his Elliott wave analysis. And the halving cycle contest, like in last many years, BTC never retraced 60 to 70% of the whole cycle, and so it is against the 39,000 might be against this proposal, right? So basically, the Claude AI model analysis focuses on these five criticisms as presented in this diagram. You can see the first one is the wave overlap risk. The second one is ABC equals to WXY, and the fifth one-to-one target can also be equally valid with 1272 and 1.618 Fibonacci. The macro demand zone around $57,000 and halving cycle in in many previous years that has 60 to 70% retrace never happened. So these 5 points has been presented by the Claude AI model, but Daniel in his Champions live stream has presented different point. If you want to go through, you can pause the video and read the summary of what Daniel has presented in his Champions live stream. Also, you can go through the each diagram presented by the Daniel. If you presented. I cannot go through the all Elliott wave count that is presented by the Daniel, as you are aware of the copyright issue. So if you want to get the full analysis, please go through our website. And from now onwards, I am going to discuss about the order flow. That is my own independent technical write-ups and not copied from any other channels. So if you want to go through the order flow analysis, you can go through our full video, or you can skip from here and leave this video from now onwards, as I'm going to the various order flow analysis. And also on Sunday I published a video that I talked about how market going to crash, and that likely going to happen as per the order flow analysis. And now I'm going to talk about. Let's go quickly through our order flow analysis. Let's go to the trading checklist that we have prepared with the help of Claude AI model and our own technical knowledge. That is my own expertise, and I'm not claiming to be the expert in order flow, but this is, I think, more likely to be followed. The first one is you can see in the trading checklist is the Coinbase premium. Second one is ETF inflow outflow, futures volume 7-day moving average. Now the why I'm using Coinbase premium and ETF inflow outflow, because these two indicators are used by the US institution, and the BTC as whole after 2024 has been manipulated by US institutions and Trump. And so this whole BTC volume has been controlled by the US institutions. So like there are many finance firms, like there is a Jane State firm. For many years they for trading US stocks they have been using ETF, inflow outflow of US data. So that same thing has been happening in BTC. Now in BTC, ETF inflow outflow is the main indicator to determine the volume, not like symbol volume or periodic volume indicator or this and that and data software and Excel chart. These are not, these things not going to determine the price action of BTC. So that's why Coinbase Premium Index, ETF inflow outflow, futures volume, these are important. The first one thing is you can see in the Coinbase Premium Index, it is still making so many rates at the downside. Basically, US institutions, small companies, and a large number of US retailers trades on Coinbase exchange, and it does basically represent that they are not interested in buying BTC. They keep selling BTC even at the lows, even at 57,000. Currently the Bitcoin is around $63,000, and they are not interested, as simple as that. And why the retail trader in Asian countries and the European side they are interested in buying, I don't understand, as against the Coinbase Premium Index. But if you go to the simple volume and other indicators in Atta software or trading view, they might represent that, oh, there is some kind of volume is coming in, so let's go long. That's not the correct way to determine the volume. To determine the volume, we use only two things: Coinbase Premium Index and ETF inflow outflow. The second data you can get from the Farside UK website, and clearly on 22nd June there is 68.3 million US dollars selling has been done by the US institution. Then clearly on 17 June, 18 June, and on Monday 22nd June, when US institutions are selling BTC, why are you guys buying BTC? While going long on fake Monday pump, and these things I have discussed on Sunday also, then same thing is happening as well. And third thing is BTC ETH futures volume 7-day moving average. This does not represent any kind of bearishness or bullishness in the BTC price, but does represent whether any kind of large move or a considerable amount of move is coming in the BTC or not. So currently the BTC ETH futures 7-day moving average volume is flat, and so there is no considerable and large move coming around in the BTC price. So that does not mean it can go down or not. So this also not a clear indicator, but Coinbase premium and ETF inflow outflow are two important indicators that has already been discussed by me. Now let's go. The first one that talked about the Coinbase premium index, that is bearish. ETF inflow outflow bearish. 7-day moving average futures volume BTC and ETH considering this is flat. Now let's go to the other part of our trading checklist, that is OI weighted funding rate, 7-day moving average, funding rate of the exchanges, basis rate of the exchange. Now again, if you go through the OI open interest weighted funding rate, it has been taken from the CoinGlass, I think coinglass.com or something, and you can clearly see there is a large spike on Monday, and that's green one. And this large spike basically represent there are a lot of huge amounts of longs on the fake Monday pump came on, and people start going long. Oh, BTC is going to 80,000, but they are not considering this chart, and they didn't. I don't think anyone aware of many people aware of this thing. And let's go to the 7-day moving average BTC funding rate, and the exchange rates are neutral and not considerably below 15%. It's around like 2 to 3%. If you go to the block.co, you can get the data, and it's not considerably very low, and so it's only around 2 to 3%. That considerably neutral, or basically represent the BTC going to be the chop. unless it's crash like 15%, and then you can considerably go for long, as this represent a short squeeze likely to be coming. Or if the BTC, if the funding rate goes above 50%, that means a crash likely to come. Now let's go to the BTC annualized daily basis rate. This data has been given by the Binance, and other basis rate data has not been given the US institutions, as they might be trying to hide the data. So currently the Binance basis rate basically shows the price is flat. Yeah, so the rate is flat, and so the US institutions are not bidding it into, and that's why retailers, you and me, should also not bid into BTC. If you have like patience for like 6 months, 7 months, if you go to the Coinbase Premium again, that is going red around from August 2024, and they are clearly not any kind of volume coming in the BTC if you go to the Coinbase Premium. So basically, why from last 6 7 months retailers are buying BTC, I don't understand. So let's go to mark our trading checklist. The first one is the OI weighted funding rate. Weighted funding rate is bullish, but that shows the price is likely going to crash. And the 7-day moving average funding rate basically is negative. The basis rate also. So if you want to get access to the full trading checklist, and there are many other things that I have researched about, like the CME data, the hedge fund managers and asset managers, whenever they go shorts on CME, the market likely to go crash. Like on 10 October, if you remember, there was the tariff imposed by the Trump on China, but at that time the asset managers and hedge fund managers have there are large amount, millions and billions of dollars of shorts position has been taken by the hedge fund managers on CME exchange at that particular night just before the announcement. So that data is very useful, but if you have to go through the commitment of trade, there is COT report published by this US trade. I don't remember that. So if you have to you have to download the whole report, and you have to draw your own graph, because those graphs are not available in the blog.co in the free plan. You have to buy the paid plan. Now let's go to the chart that is shown on Sunday, that value area high, point of control, where you like this same chart has been. If you go to the Sunday video presented by our channel, this same chart has been presented on Sunday, and you can see there is I clearly said that the present rise in the price is not bidded by the spot volume, and so this, if you go to the coinanalyze.net, yes, as you can see, the present price is not bidded by the green line. Green line was going down and the price was going up. However, on Monday, you can see the green line was also going up and the price was also going up. So there was some bidding going on through on Monday, but that likely going to be crash. And currently you see a orange block which is above the 25 million. So that's block represents a large number of short liquidation has been happened just now at around $62,500. So likely there is likely to be a rise from here onwards. And also you can I said the CBD divergence and the exchange funding rate is different, and the funding rate that represented by the block.co is different. So exchange funding rate is not reliable, and CBD divergence is not reliable. So many times it gives false signals, and open interest is dead, no one interest in buying Bitcoin as usual. And how far BTC going to be crash, you can get the data from the ETH chart. ETH chart is of my own, and you can see in the trading view, and the $1367 is the first level and $877 is the second level. So you can see there are many equal lows has been formed in the Ethereum chart, not on BTC chart. So these 1, 2, 3, 4 equal lows and formed on it, and this likely going to crash till $1367, and not likely going to be upward unless there is some kind of a spot bidding. Coinbase premium is coming, and like ETF inflow outflow also positive. So, and some positives should come at around this level, then only you can say the each price is going to be upward. So each final target is each first final target is $1367, and that's how much BTC going to be crash around 54-55 thousand dollars. You can likely to see if you need to mark an alert in it, and whatever price in BTC comes, you can consider it as a bottom. Whether it comes as bottom or not, you can only get by positive Coinbase premium. And there I also explained about the candle structures should form likely there is some body close of the candle structure. ETF inflow outflow should be positive, funding rate should be too negative at the bottom, and there are many factors you need to analyze. If you want to get the full access, please visit our website www.penlix.com, and also you can alternatively visit our website www.astercharts.com. If you want to get the full access of CC, that also given by our website, and if you want to get our own analysis, that also given our website. Thank you for watching. If you like our video, please share to your friends and those interested in order flow things and other things, technical analysis. And also please like, share to your friends, and subscribe. Please subscribe, because if you don't subscribe, I don't get any kind of motivation to produce more and more videos. And also there is lots of legal formal complaints filed by the CC, so it's very hard to make these kinds of video. Thank you for watching.